Hi, I'm Maurice Jackson alongside David Cates, the president of Denison Mines. We're here live at the Stansberry Conference in Vancouver, British Columbia. David, pleasure.
Yeah, real pleasure, Maurice.
You're one of the foremost experts in uranium. You mind sharing with the audience what's going on in the world of uranium?
Yeah, I mean, uranium right now, it's a big picture story, right? We're looking at a supply-demand fundamental story where supply is taking off. You know, we see it in the long term. Demand, I should say, is taking off.
Mm-hmm.
In the long term, we see China, India, and Russia driving the demand scenario, and we see supply on the other side struggling to come on stream. New supply is difficult to justify at prices where we're at. And so in a big picture, macroeconomic level, we really see a scenario emerging where demand is predictable. We can see nuclear reactors being built, and we can see it's rising. And at the same time, we see no reason why supply should rise. And so that together creates a scenario where prices are going to be under pressure, and prices will have to rise. Without rising price, that supply is not going to materialize.
Okay.
And if that doesn't materialize, man, the space is going to go crazy because everyone's going to be fighting for material.
Yes, they are.
Utilities have got to make power. They've got nuclear plants that need to run for them to make any money, and they're going to be fighting for that material. And we saw this sort of thing happen in 06, 07, where the price rose all the way up to $120 per pound, just because utilities were fighting to get supply.
Okay, and the current price right now is roughly around, it's in the mid-30s, is it not?
Yeah, we're in the $36 mark for the spot price, but there's also a long-term price, so if anything's on a contract basis, you're up in the $46 to $50 range.
Okay. And you mentioned nuclear plants. How many of them are projected to be in production or actually operating and running in the next 20 years?
Yeah, I mean, these things are cycling through, right? Some plants will come online and other plants will come offline. I think what's more important, not so much the absolute number, but the plants that are coming online from Asia. So you've got China looking at adding 200 plants roughly.
That's amazing.
Exactly. And they'll be adding them at a rate of, say, 1 or 2 per quarter from here on out. They've already started to build them. They're under construction. These things are already happening. India is going to layer on plants as well. And then Russia. The top 3 there are going to account for the bulk of the growth in nuclear power.
Now, how can an investor take advantage of this opportunity? Because to me, I believe there's a great value proposition here with uranium. Is this the right time?
Yeah, I mean, timing and how are kind of 2 separate questions. I mean, let's talk about how. There really aren't that many ways to play the uranium space. You know, there's some of these utilities you can buy into, but when you buy into a utility, you're buying into a whole bunch of stuff because they're probably not just generating nuclear energy, right? So then your next option is to buy into a uranium producer or uranium exploration development company.
Okay.
Right? That's where Denison fits into this. When do you buy? Well, it's also a tough question because we know the price is under pressure right now because there isn't a lot of activity in the uranium market and price is subdued. But at the same time, you know those fundamentals are going to emerge where there will be upward pressure on price. So how do you pick the right time? Okay. Classic investing question, right?
Right.
Everyone wants to pick the bottom. It's tough to know where that is. I think we've already hit the bottom. I think when we had uranium at $28, that was the bottom. We're up to 36 now. So, I mean, realistically, now is a reasonably good time to be getting into this space because you're on the low end of the grand scheme of things, but you're on a bit of an upward tick.
Right. Well, what does Denison Mines, how does that fit into one's portfolio?
Yeah, I mean, Denison's historically been a story of exploration development in the eastern portion of what we call the Athabasca Basin, which is in northern Saskatchewan. We've recently announced a merger with Fission Uranium Corp, and Fission, of course, has Patterson Lake South property with Triple R deposit on the western side of the basin. What we're trying to do here is consolidate those assets into one because we want to be the go-to brand for uranium investment. We know Cameco's out there, and Cameco is obviously an established producer. But what we're trying to do is create a clear number 2 in the space. There really aren't any other companies in sort of the mid-cap range. Cameco, large cap, you're talking $6-7 billion. And then you drop all the way down to the small caps, where you've got Denison now, Fission now, other companies in that space fighting for a pretty fixed number of dollars. Together will be about $700 million to $1 billion company. We're going to start to open markets up for this for our companies. We won't fight against each other. We're looking at bigger funds to invest money into us. And I think that's why the merger, creating this consolidated go-to company, is so important for both of our companies. Investors will see us as a clear choice. If they want exploration development leverage and they want uranium in the Athabasca Basin, there's not going to be a better choice than Denison Energy.
I would agree on that. If we can, switching gears slightly, Lucas Lundin, what's his position in this?
Yeah, no, absolutely. So Lucas has been with the Denison brand for many years. He's going to be taking the chairman role in the combined company. And I think Lucas is a pretty smart businessman. I mean, he's been very successful in the past, and I think he's behind this concept of creating the go-to brand. And you might ask, okay, well, why now, and why is Lucas thinking that this is the thing to do? I think it's underpinned by a fundamental belief that the uranium market is about to take off.
Okay.
And so together, we're going to have more leverage to that market. And I think that's what Lucas sees in this deal, and I think that's why he's so excited about this deal, is because he sees that the market is going to take off, and there aren't that many places to put your money, and we're going to put together the best option for investors in the space.
That sounds amazing. I'm a shareholder of Fission Uranium, and I'm actually very excited about the merger.
Great.
I see the synergy there and the opportunities for you to specialize in what you specialize in, and that Fission specialize what they specialize in. And what is the new symbol going to be?
Ticker symbol?
Yes, sir.
Yeah, I don't know, actually. We would probably still be DML, but we may look at rebranding that, yeah.
Okay. And if somebody had further questions, who should they contact?
And our website's got a lot of good resources on it. You can always contact our investor relations group. We've got a phone number on the website.
Okay.
Sophia Shane and Amanda Strawn will be able to point you in the right direction.
Okay. And what's the URL? What's the website?
It's www.denisonmines.com.
Okay. Well, sir, it has been an extreme pleasure.
Real pleasure, Maurice. Thanks so much.
Thank you.